Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
How can you govern a country which has 246 varieties of cheese? Charles de Gaulle, I think it would be a good idea. When asked what he thought of Western civilization, Mahatma Gandhi, instant gratification takes too long. The best way to teach your kids about taxes is by eating 30% of their ice cream. Everybody needs money. That's why they call it money. Danny DeVito.
Gold is having an identity crisis. For decades, investors bought it when stocks looked scary. But lately, gold's correlation with the S&P 500 has surged about 0.5, meaning it's often moving in the same direction as equities rather than acting as a hedge. So what's changed? Gold is increasingly trading as a currency debasement asset, not a panic asset. Investors aren't buying it because they're afraid of markets crashing. They're buying it because they're worried about governments printing, borrowing and spending with Olympic level enthusiasm. In other words, gold hasn't stopped working, it's just switched departments. A quiet but important shift just happened in India's economic league table. Gujarat has overtaken Maharashtra to become India's largest state economy, while Uttar Pradesh has climbed to number 4, pushing past several traditional heavyweights. The biggest story isn't who won the race, it's how many states are now running for it. For years, India's growth was concentrated in a few coastal powerhouses. Today, manufacturing corridors, infra spending, and supply chain shifts are creating new contenders. And keep an eye on Uttar Pradesh. With a population larger than most countries and rising industrial investment, it's starting to look less like a demographic challenge and more like an economic opportunity. India's economy just crossed a milestone. 56% of the workforce is now classified as formal, leaving 44% or 27.3 crore workers in the informal sector. But here's the catch. A big part of that improvement comes from counting PM Kisan beneficiaries as formal agriculture workers. Change that one assumption and roughly 12 crore workers could move back into the informal bucket overnight. This does not mean the data is wrong, it means the definitions matter. Sometimes an economy changes because factories are built, jobs are created and productivity rises. Other times it changes because someone updated a spreadsheet. While investors were busy watching stock charts, India's infrastructure machine quietly shifted into a higher gear. The number of new projects jumped nearly 12-fold in Q4 FY26, while quarterly spending surged an eye-popping 545% year-on-year. The star of the show, roads and highways, accounting for 439 projects worth over 4.1 lakh crores. Add power transmission, water resources, metros and logistics, and this starts looking less like stimulus and more like a long-term productivity play. Infrastructure isn't glamorous. Nobody brags about a transmission line at a dinner party. But roads, power, logistics are often where economic growth begins before the stock market notices. The RBI's balance sheet did not just grow in FY26, it bulked up. Total assets surged 20.6% to 91.97 lakh crores, helped by a 63.8% jump in the value of gold holdings and a hefty 44.9% rise in domestic investments. What's fascinating is that RBI made money from both sides of the house. Higher interest income from rupee securities boosted earnings, while rising gold prices quietly turned the central bank into one of the year's better performing gold investors. Central banks usually try not to be exciting, but when your gold portfolio rises 64% in a year, even a balance sheet start looking like a bull market chart.